Hello, this is Pro VG. Today we are talking about very important video, particularly in the light of upcoming budget. That is mastering the money skills. That is going to understand financial literacy totally, for the to know the after effects of the budget and how to plan our wealth. Because more than 75% of Indians never learn how to handle, save, invest, and protect money. They don't seem to care much. Let's talk about how Indian families can learn about money in a simple and useful way today. What does it mean to be financially literate? Being financially literate means knowing how to make money, spend it, save it, borrow it, invest it, and plan for the future. Studies from around the world show that people who know how to handle money are twice as likely to build wealth over time. For example, two Indian families make 50,000 per month. One makes plans and saves. The other person spends money first and worries later. It's not income that makes the difference after 10 years, it's how you handle budgeting. The most important thing for Indian families. Most Indian families only make a budget when they run out of money. Families who make budget save 20 to 30% more money. Easy rule for Indian budgets: 50% for household needs like rent, groceries, and school fees, 30% for wants like going out to eat, shopping, traveling, and 20% for savings and investment. For example, a family with a salary of 40,000 can still save 8,000 every month if they plan ahead. Budgeting does not change how you live, it takes away stress. Be ready for surprises with a savings and emergency fund. In India, you can't plan for emergencies. The main reason Indian families go into debt is because of medical emergencies. Families that know how to handle money set aside 3 to 6 months worth of bills. Don't mix savings with everyday costs. For example, one family takes out a high interest loan to pay for hospital bills. Another person has children's and emergency savings. Same problem but different results. Banking and digital money. Be smart and stay safe. UPI, ATMs, and mobile banking have made things easier, but they can be dangerous if used incorrectly. There have been a lot more cases of online fraud in India in the past few years. Important lessons about money. Banks never ask for a one time password. Always read messages from your bank. Keep your PIN and password secret. For example, just being aware can save senior citizens and families lakhs. Loans, credit cards, and EMI trap. A lot of Indian families depend on EMIs. In India, the interest rate on credit cards can be more than 40% a year. Financial literacy teaches loans for homes and education can be helpful, but be careful with personal loans and credit cards. The minimum payment is a debt trap. For example, if you don't pay your 50,000 rupees credit card bill, it could quietly double. Loans should help you live, not control you. Make investments because they help Indian families make money work for them. It's not enough just to keep money in savings accounts. Long-term investments can beat inflation by giving you 8 to 12% return. Easy ways to invest in India. You have plenty of ways like SIPs in mutual funds, EPF and PPF in provident funds, NPS, National Pension Scheme on retirement, and whatever balance is there that you can put in gold. For example, a 5,000 rupees SIP per month for 15-20 years can pay for your child's education or your own retirement. Little by little over a long time adds up to big results. Another important item on financial literacy is insurance. It's a family protection, and family protection comes first. Insurance is not an investment, it is protection. A single serious illness can wipe out years of savings, what every Indian family needs. Insurance for health, term life insurance for members who work, and car insurance if there is a car. Families with insurance get through hard times with dignity. Planning for retirement. Don't rely on your kids alone. Parents used to think that kids will take care, but the reality says otherwise. Rising healthcare costs make it necessary to plan for retirement. EPF, NPS, and savings, insurance for health, planning for own income. Being financially literate gives you respect as you get older. The final message is being financially literate does not mean you want to get rich. It means keeping your family safe, teaching your kids, dealing with emergencies, living without stress, retiring with dignity. Life doesn't change with money, knowledge about money does. To help all those who want to learn more about money, like it, share it, and subscribe it.